Hey everyone, it's Evan here from the Trade Risk on Thursday, January 26th with a quick video looking at some stocks that you guys submitted that you would like reviewed, and we're got about 6 or 7 names that we're going to run through. So let's get into it. SSH, this is the first ticker that you guys submitted. This is a name that I've never seen before. It is a very micro cap stock, down less than $5 million market cap, and since its IPO, we're looking at let's go to the weekly time frame here. Since its IPO in 2012, it has not been able to sustain an uptrend at any point during its publicly traded existence. If we go to the daily time frame, it recently had a huge move. So at the end of December, had a 176% single day move. I have no idea what the news story is. But where we are now, it's effectively retraced that entire move, given all of that pop back, and it's now right above the all-time lows once again. Now, the couple of points that just stand out to me here, volume has picked up recently. So we've seen, take a look here at volume, you can see that's really starting to pick up. I have no idea what the news story is on this or what this company does. But from a pure technical standpoint, this looks like a heartbreaker stock, something that's going to go boom and bust but continue to gravitate towards zero. Right now, looking at that monthly time frame, 8 and 20 period, there's momentum to the downside, very sustained downtrend. Weekly time frame, same scenario, 8 and 20 period moving average to the downside, bearishly aligned. On the daily chart, it's the same thing. So multiple time frames, the trend is lower. We've recently given up all this pop. I know now that we've retraced it all, it gets interesting. If you're trying to play in this, you have support or at least lows to use as to mitigate your risk. $5.30, the recent lows from December, all-time lows. I mean, if you're trying to establish a speculative position in here now, trading against those lows, I suppose, is a strategy. It's not something that I like at all. I would want to see a higher low. I'd like to see a trend develop. And like I say, it's almost never been able to do this. So for me, I would like to see a pop above $8, $9, $10, and I'd like to see it hold and then try and make a second move. That's what I would like to see as a trend develop. If I were to play anything like this. So that's my take on it. It looks like it's in a lot of trouble. It's going to have some explosive moves. Again, $5 million market cap. This thing can really move, but you just have to realize that the odds are against you, momentum's against you since this became public many years ago. So that's SSH. CHK. So this one here, I know that the trader here has a position in CHK. So CHK is pretty interesting. If we go to the weekly time frame, it had this surge in volume last year where it really kind of carved out this bottoming pattern and lifted off the lows as it got all the way down to $2 or maybe a little below that. So since that point, it's been stair-stepping higher. It hasn't been a super strong mover to the upside, but it has been covering pretty good ground here on at least a percentage basis. So the way I look at this weekly chart here is, we had a failure to kind of take out this $8 high. So it made an $8 high back here in September of 2016. It couldn't quite get above there in December. It failed right at that high. So we have this double top in place. And now with this week, after pulling off about 6 or so weeks from that $8 level, this week it looks like it's trying to get going here back to the upside. So I think this is an important week for CHK. If I were to own this stock, this 20 period EMA on the weekly chart is sort of the line in the sand that I'd be using. We did get a close below it here in November, but then it quickly reclaimed it. So I'd like to see this become a higher low here on the weekly chart. If we go to the daily chart, you can see that just comes into basically this week's lows. Last week's lows right around 655. I'd really like to see that hold. If we saw a complete rollover here and that get taken out, I would just be more concerned, and you'd have to really be willing to hold this back down here to $5 or so as a potential retest. So for me, I'd like the higher low to get in place, and then that $8 to the upside, that's the area that you ultimately want to see taken out to get that momentum, to get that trend extended back to the upside. So kind of a wide range, but that's what I'd be looking at there for CHK. Next I got is DUST, DUST. Okay, and Dust is the bearish 3x ETF to the gold miners. So we're going to just look at GDX initially here because that's sort of the underlying, the gold miners ETF that it tracks. So with GDX, we had a downtrend in place since August of 2016, all the way to the beginning of this year, where we snapped this downtrend line, the series of lower lows and lower highs, and we had a strong surge to start the year in the gold miners. And you can see we ran all the way up to this $24 level. If we go to the weekly time frame, you can see we also ran right into that 8 and 20. It's still bearishly aligned, and you can see we're just kind of hovering around here, and with the candle that's sort of in place right now for this week is a bit of a reversal candle, maybe saying, okay, time to take a breather, come back down and retest, or at least fill and consolidate. That's sort of the message, the picture that I look at when I see the GDX here on the weekly time frame. Let's go back to Dust now and look at some specific levels. So I think tactically, this $30, basically the lows from this week, I think are actually pretty interesting. As you can see, November, this was support. There was a lot of supply in here throughout September and October 2016. So I think staying above $30, staying above 31 really this reversal day on Tuesday of this week, I think that's going to be important, especially if you're trying to play some type of mean reversion or some continuation higher. Right now though, again, you can still see momentum is against this trend right now in Dust on the daily time frame. So if we do continue to rally here, I'd probably be a seller, or at least reducing position off into this $39 level as we start to get up in here. So if you're in it now, I have no idea if you are or not, but you could probably stick with it as so long as you're above 31. Take some profits into 39, or at least scale, or at least be aware of price action, and then kind of take things from there. The weekly time frame, you do have you had momentum on your side throughout the end of 2016, and then it really kind of lost a lot of steam here coming into the new year. So do maybe for a little mean reversion, maybe again a trade back up to 40 or so, but I would not want to fight this too hard until we saw this really start to reclaim into some of these bigger levels here. So that's sort of the way I'd look at it. It's not my favorite, but I can see what you're looking at. The GDX could easily start to roll over here, and I think again coming back down and retesting these previous lows, you might get a move higher in Dust. So I do like it. I think you need to be tactical though. I think it's a high risk, high reward trade right now. GoPro's next. So GoPro, I actually do like GoPro. I like the play here. As I haven't looked at this chart in a while, but it's trying to carve out a bottom. This thing has been beaten up horrendously for the beginning of or mid of 2014. It's been in a downtrend, and it looks like it's trying to stabilize down here above this $9, $10 area. You can see it sold off, almost got down to that $9, $10, almost the all-time lows back here at the very beginning of February of 2016. It did make new lows here in May, but it found support, got a rally up to 17, and then it came back down all the way to that $9 level recently, and it's finding some support again. So it looks like it's in that stage of sort of moving sideways and wearing people out and potentially carving out a longer term base. So I think your risk is well defined. I don't know what your time duration is in this trade or interest in this trade is, but if you're above $9, I think you have sort of your risk defined, and you can potentially kind of stay with this trade and look for a move back into the midpoint of this range. I would just point your attention to the weekly chart and the monthly chart, which is still showing lots of momentum and damage in this name. So I'd be aware of that, potentially looking to take profits into resistance or reduce positions up here right around $12, $13, those big round numbers. But for now, if your stop loss is in place, particularly on this daily time frame, you can even use a tighter stop loss if you want a slightly bigger position size and trade against this gap. It's a little bit tighter. It's going to involve some more whipsaw. $8.80, $9. That would be a safer stop loss. Starbucks and Microsoft and Google, all from someone that asked about it. These all report earnings today, so I don't have too much to say about them because they're all going to be influenced heavily by today's earnings reports. If you're looking for levels to trade off of through earnings, I suppose, just keep, look for the big round numbers. Anything near term is probably going to have a ton of volatility, but you want to pay attention to the big round $60 level here in Starbucks, 55 on the downside. That was a pivot low. Google, you have the big round $800 level. There's no upside resistance there. And Microsoft, again, you got this pivot down here right around $61, $62, and you're trading at all-time highs, so there's no resistance above you. Not going to go into those names any deeper because they're going to be moving quite a bit here shortly after this video. And finally, the last name is CVRR. So this is also a name I'm not familiar with. If we go to the weekly chart here, you can see this one is sort of a young issue as well. Came public in 2013. It's been in a downtrend basically its entire publicly traded career, and it has recently found some support and found some buyers interested off of this $6-7 price level, and it's almost doubled in the past 6 months. So when I look at this chart here, again, let's go back to the weekly chart. It is above a rising 8 and 20 period EMA. I like that. There has been an uptick in volume off of these lows. I like that. So the longer time frame is reasonable. I am noting this supply in here from beginning of 2016, this February to April area, right around $13. Little bit of a concern, or at least a target or something to be aware of up here. Perhaps, especially from these damaged names, they like to consolidate a lot longer than many people think, but when they've been in a long-term downtrend for so long, usually when you get to these big telegraphed resistance areas, then they start to cool off and just consolidate sideways. So be aware of $13 on the daily time frame. I mean, there's nothing inspiring here for me to want to get involved in this right now, particularly with 13 and that resistance up here. If you're in it, I think you can stay with it. You have, again, multiple time frame alignment here on the daily and weekly chart with momentum still building and rising to the upside, so I think you can stay with it. And you have a higher low that just got put in place here at 1060. So depending on how tight you want to trail your risk, trail your stop, I would still again be very interested in how it reacts up there to 13. But I think you can get a trade up there and then start to reevaluate, lighten up, or at least just pay a little more attention. So that is, I think, all the questions you guys submitted. Unless people are still submitting questions right now, then apologize on that. But hope this helps. Thanks for sending those questions in.